The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
And welcome to another excellent edition of the Power Trading Hour. And it is just one of those days that's going to be great. I know it is. And what's going to happen out here? It's just going to be a great day. Just got to say it's going to be a great day. Got to put your feet flat on the floor and say it's going to be a great day, even if you have to suffer through the disco music that they play right before the show. Yes. Once again, an affront to mankind. They talk about about bad things that have happened in the past. This certainly will live on in annals of history of just horrible music selection. But we'll try to eventually win these guys over, let them know the errors of the way. So what else do we have going on? Market that's fairly flat. We talked about Wednesday, I think, or I actually did it Tuesday in my newsletter, which is I had several short positions and some other positions, and I just said, this market's not going to go anywhere. I saw that everybody was setting up options to narrow down the range, and pretty much set at 1685, that we had probably 10 points up and 10 points down in a range before next Wednesday's 1 o'clock announcement by the Fed, and it was time to do other things. And I've been working on software, been cleaning up my new computer, been doing a lot of other things. This is the time, if you are a trader, and you're not trading it on 5-minute charts, to go ahead and start working on, getting everything ready for what will be a huge volatility day Wednesday afternoon. And so I'm spending a lot of time looking at charts, spending a lot of time watching options and the VIX, and just what can we find out here to trade? But I have a feeling it's probably not going to be wise to anticipate the Fed reaction, at least to the Fed's announcement. He could do darn near anything. And that is the rub when you have a single gentleman that's probably going to tell the direction of the market for at least, I would say, probably a week after his announcement on Wednesday. Then probably the true forces of the market will come back. So it will be interesting. So anyway, what else do we have going on in this market? Well, I talked yesterday about looking for the washout in gold, and that I would love to see a 100-point down day. Well, we didn't get it. We're down $22 at 1308 on gold. I think we could still see that. I'd love to see just a miserable, bone-crushing day that gets all sense of bullishness out of gold, and basically only the strongest hands and stomach could hold it. But I think we're still a way away from that. Silver's off at 34, almost 35 cents at 21.80. We've got platinum plus $6. And crude's off 84 cents at 107.78 for West Texas crude. We've got natural gas up a little bit, and normally watching what's going on in this market. Probably the most shocked out there are people watching their Apple shares continue to sell off a little bit. Not a huge move out here, off just a little bit less than $6. But what I've been showing people for a while, and we talked about it here ad nauseum, that means to be nauseated, I think, ad nauseum, that what you wanted to be watching for in this market for bounces, and where you were going to get in and get out was going to be at the confluence levels. Again, we were showing Apple as the poster child of this, but also where we were going to come back after it bounced off that, what was that, $514 and some odd cents. It came within 70 cents of the top of the projection in the confluence zone. I'm going to say that that's deadly accurate in this market, but this one actually had a very, very good setup. Now, what are we coming back down into? And that is the upward movement that started on the 12th of August out here. It had a decent volume up on 13 million shares. So when we get back into this range, you're going to need more than about 13 million shares. Of course, we just hammered down on a lot of volume, 14 million shares, and 32 million shares on the 11th. So we've gotten back into that. It's going to take a while to chew through these if Apple is going lower. I'm not going to make a prediction here, mostly because the options say that they want to expire this right at 470 next Friday, and I think they're probably fairly accurate. Options were basically even into Monday saying 470, so a lot of people were fairly bearish on Apple's outcome, even though Carl Icahn is more than willing to go on the blower and jump on CNBC. Kind of interesting, though. I was watching the interview with Marcin Butteroma, and he was basically saying, well, I went on, but you guys just call me all the time. You call me all the time. He's not very humble, let me put it that way. I guess you don't have to be. But, I know that it's almost a 27 news cycle on CNBC. They're always looking for guests, doesn't matter what, as long as you have somebody talking and moving their lips. Always looking for somebody to come on, and of course more than enough people are willing to. For the most part, guests like Carl Icahn and his, whatever it is, $25-30 billion, probably a guest that can say yes or no and when he wants to go on. But going to be interesting. Anyway, Carl was out pumping this thing, saying how he's buying a whole lot more shares. Well, if he loved it at 475 yesterday and the day before, he's going to really love it at 467 today, and just a hair lower in price. So what else do we have going on in the marketplace? December copper fell a penny. This thing is basically showing a weaker industrial market across the world, and we'll take a look at them. We're seeing kind of the first kind of signs of life in pot, which is potash. Of course, this thing rocketed down on news that the Russians were going to bust the cartel of a lot of the northern European former satellite states of Russia. This thing's come back up and tried to fill this gap. Pretty much about halfway. Still has a little bit farther to go. You'd look at this about 2467, which is the first 318 retracement of the move from the top down. If we want to get into a little bit closer range here, you're going to see that it gets very muddy from about 30. I call it 3480 to 3580, where there is a confluence zone, but it's wide. It's not going to be something that stops it. It's going to act very muddy, and it's right in the center, pretty much of this big gap down. So I can imagine we could still see a little bit more move up in potash before it decides to once again go back and test this high volume low back to the August 2nd low out here. But it is showing a little signs of life. Aetna, I think that's AET, another one that's moving out here today. Not bad out here. Nice move, and even's got a little bit of volume today for a Friday, which is nice. This thing's been making nice ABC ups. If you were interested in Aetna, what you would want, and this one has a fine and wonderful sign of support back here at about, 64? We're going to go to Victor in Paramus, New Jersey. How you doing today, Victor? Oh. That it? Well, I guess we did have him or didn't have him. I'm not exactly sure. We'll find out here in a second. Anyway, we're looking at Aetna And if you're looking for a fine sign and want to go and read Tom's book for actually coming back out here, it is going to be looking. Yeah, it's about 64.50 out here, and you've got a very, very narrow window out here, but not bad. Got about 3. It's going to be about a 4.5, a little over $4 a move. And we've got Victor from Paramus, New Jersey. How are you today, Victor?
Good. How you doing? I just need INTC and POM.
Is it POM or TOM?
POM.
Paul Oscar Meyer.
Yeah, and then check Intel. That has a lot of volume today.
Yep, it certainly did, and working pretty good. So let's go to PepsiCo Holdings first. What are you thinking about doing with this?
Looking at it, you said 1734, though. I don't know. Is it going to go down that low?
Before?
Yeah, last week I called you on it.
Well, let's take a look at this. Yeah, you got similar volume. So I'm going to say, yeah, you got 1777 at least. So, yeah, I'd probably give it a day or a couple more days. I don't think there's no real sign out here. If you're watching on Tiger TV or on the Den, this thing's had more volume and energy down. Most likely, even if this thing did bottom, would be that it would take a while to consolidate out sideways. So I can't say that you're...
Dividend.
Huh?
6% dividend is probably higher than that right now.
Yeah, you might buy it for the dividend, but as far as the stock price moving, I can't see this thing doing anything other than going sideways for a while and consolidating these losses. So I'd say 4-8 weeks at least for it to consolidate out sideways, even if this did bottom here. And I suspect you're probably really going to look at the 1777.
Well, you think that the Fed ain't going to raise interest rates, because if they do, then they got to pay higher interest rates around the whole world.
I have absolutely no idea what they're going to do.
That's what the whole thing, utility stuff.
Yeah.
What about Intel? What about the buying? Are they dumping right now or buying?
No, there's a lot of good news in Intel, INTC. And that's what's, in fact, most of my Tech Insider today was about them. I still think we're going to get one more pullback in Intel, and that's where I'm going to buy it. I think we've gotten close, but that 2150 area range is what I'm looking for. And I think we can get it if the market starts pulling back next week.
How much is that correction on that stock then? If you're at 23, about 10%?
Yeah.
8%?
Yeah. It's, it's going to be $2.30 would be a 10% move. So, yeah, looks pretty good to me. But I'm thinking that I'm waiting for the market. I think one of the strongest stocks out there right now, and I like it. I wrote about 2 pages about it today in the Tech Insider, which you can always go and get a free 2-week trial on. We'll be back in just a minute. Thanks for the phone call, Victor. We're going to be looking at a few other stocks here in a minute.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com. TFNN is having an open house in the Tiger's Den for 2 weeks, and the best part is that everyone is invited and you just have to be a member at TFNN. The open house in the Tiger's Den has already begun and will last through our week-long virtual trading competition, which ends September 13th. Use this time to exchange trading ideas with other traders in the virtual chat room and to discuss trading strategy. For all the information and to take part in the Tiger's Den open house, log on to TFNN.com today. You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a 3-fold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're going to look at a few stocks out of here. Baidu, kind of interesting. I wanted to see what this thing did now that it got up into this gap. That gap actually occurred on April 23rd in 2012. That gap actually came down on modest volume, 6.8 million shares. So what we want to see is how this thing went through this gap before, and 6.9 million shares. So you have at least a similar volume. Of course, no real sign of conviction a lot of times when you hit through these several levels. Now this thing got up to that level, went sideways for a few weeks, got enough steam to break it, and I think we're probably going to see Monday or Tuesday what's at. But we have a lot of stocks at decision points in the very near future. Micron keeps on just moving. Of course, this the last few days ran once again after the one of their competitors' plants in Japan caught fire and reduced the actual availability of memory. When we see the last few days up here, this thing did move fairly nicely and have some volume on the day the fire was reported. It's been kind of just hanging out here now, but you'd really want to be watching these things because it wants to probably come back around the $12 level fairly quickly. And I think basically Micron is in a commodity business. It's not oil or silver or anything else. It's in memory. But the specs for memory have to be set mostly by Intel, and everybody else actually has to come back into it. Anyway, looking for this thing at least back into this $14 gap. And we've got Rick in Orlando. How you doing today, Rick? Are you there?
Yes, I'm here.
Okay.
You here? Okay, sorry. Thanks for taking my call. Yesterday, Tom was talking with one of his callers, and he said, you need to listen to Dave White's archive for yesterday. And so I did also, and it was awesome, on particularly about implied volatility and stuff like that.
Right.
Yes, and what I did, I use Trade Architect, which is under TD Ameritrade, and I can select in my little toolbox implied volatility. So I bring up the IWM as what I'm interested in buying puts in, for example, like the Decembers.
Right.
And on to the right on the put side, it's showing in the 18, 19, and 20% area,
which is pretty strong for a ETF. If that was an individual stock, that would be very, very low. As an ETF, that's actually fairly strong. IWM isn't leveraged at all, is it?
I don't think so. I think it's a 1X.
Yeah, so that's probably fairly strong. But if you can get implied volatility in like the S&Ps at 15, or IWM in the 15s, I think that's pretty good. And
okay,
I'd watch the implied volatility probably Monday or Tuesday. It's probably going to hit some kind of low. And
okay.
And then everybody's going to want to buy puts and calls to go into Wednesday's meeting, right?
Announcement, the meeting,
right.
yeah.
So I'm looking at not particularly IWM, but I see what you're looking at in the chart here. I'm looking at some individual stocks, which I think I'll have just a little bit better odds on than buying a ETF.
Yes.
But this is not bad. This thing came within about 40 cents of tagging the high a few days ago. It came in with 32 million shares compared to 46 million shares. So what's your question other than the implied volatility?
Yes, as applied volatility goes, you mentioned looking at the CBOE and looking for the 10-day applied volatility, the 60-day, 30-day. And so I called the people at this Trade Architect, and I said, no, our implied volatility, for example, 19.28, applies to the 98 days that are remaining. Like the December 21, 2013 calls and puts.
Okay.
It says 98 days left.
Okay.
And they said that number, because I was asking her, is this 10-day volatility? Is this 30-day volatility? She says, oh, no, it applies to that 98-day thing.
Okay.
So now what we're doing, though, David, is we're entering, because that's going to change. So we want to enter with the most advantageous, and then it's going to change, but we're already in at the lower, correct? Is that the way we're thinking here?
I don't know what those guys are doing. I've always looked at the CBOE. Can you hold through the break?
Yes, I can.
Okay,
Thank you,
we'll try to work a little bit more on implied volatility in a few minutes.
Thanks.
With Rick in Orlando. Be back in just a second.
With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
And, wow, I thought we were going to something else, but that's okay. What do we got? We've got Rick in Orlando. I've spaced off, Rick. Are you still there?
I'm still here. Thank you.
You're better than me then, because I wandered off.
Thanks for holding me over, David.
Okay. So anyway, so we were talking about
applied volatility from the CBOE versus what.
Right. I've only looked at what is standard, mostly for the VIX, which is 30 days. And that tends to be it. And, of course, if you've listened to the show long enough, I'll talk about how the VIX is changing when the implied volatility of the S&P actually has vacation days, an extra vacation day like the 4th of July or, Labor Day, and how that actually affects that. Yeah. And I was telling, I forget who it was in the den, was asking, does that mean it goes up or goes down? I go, normally you get an extra day like a Monday when we're not in. You can normally see probably a 3 to 5% drop in the VIX when you come back. So normally the VIX will go ahead and ramp, but they will extend it actually, and when that comes back out, it almost always drops it too. So you have to when you're watching those, you have to know that the implied volatility will normally drop coming out of a 3-day weekend or when we have a holiday for Thanksgiving, because it actually extends that market out and you get a more trading days in it.
Yes, the market makers are expecting less activity because of that.
Well, they're worried that something will happen in China that they can't react to.
Oh, I see, that they can't adjust for. I see.
Right.
Okay,
so what they do, or what the VIX does, is it ramps into those 3-day weekends, and then if nothing happens, all that comes out very quickly, and that's why the VIX tends to drop so suddenly on a day after it, because unfortunately when we're closed, everybody is still open, so you can get 2 days of movement instead of just the 1 day. And so normally you'll see the VIX ramp into the weekend, and there's actual formulations on how that all works, but you'll notice that when those, especially when you get 30 days and you get 2 kind of vacation days in that same 30 days, you can really see a VIX ramp and then drop out when those vacation days really come out over time. So it's kind of like contango in a futures contract. You need to know when those are coming in and coming out. So just not a big deal, but something you know. Now,
I do watch the VIX and the VXO and the VXN all the time.
Right, those are 30.
Daily.
That's the 30-day implied volatility of the S&P, and normally the way that most implied volatility is calculated is pretty much the same, and that's what I look at as the 30-day implied volatility and how it's tracking on the CBOE and. On those. So the idea, though, I thought, was to give a general counterpart, because I get people wanting to buy options when the implied volatility is 100%.
Yeah. I picked up on what you said yesterday. I took that to heart. I now 30% on, regardless of what time frame it's involved.
Right, but that you're going to see that almost always you getting into like earnings. You're going to see that almost all stocks that it's going to be over that. So playing options, about 1 out of 10 times you're really going to be correct, and that's what you need to wait for. So every time I want to play an option, I know that I probably should have waited 8 more times to play one. And I haven't played any for a little while, and normally it's just like the hurricanes. You know what it's going to take. You know in advance that things are lining up, and then you can actually get into those. And what happens is most people play it like it's December and betting on a hurricane. It just doesn't happen in January and December. There are conditions that make it very good, and those conditions normally are when everybody's not looking for it, and you're going to see the implied volatility or the VIX very low on the S&P. You're going to see it very low on the stock you want to play, and then you're going to be able to maximize your return on single-sided plays on options. But that's and two. Normally, to really do that, you have to go on out of the, if you're following Nassim Taleb's model, you have to go on out of the money puts and calls. So this depends on how far out of the money, but the farther out of the money you go, normally the less you'll win, but when you do win, the more you will win. And that's been, how he made his $3 billion. Just my thought yesterday was that everybody says you can't do that. The answer is, yes, you can. You're going to lose more and eventually make a whole lot more. And that's a lot of those things are very counterintuitive in the market. And again, we don't at TFNN always have 30 minutes to explain it every single time someone calls up and says, hey, do I want to buy an option?
Yes, exactly. That was a good analogy you did yesterday. 1,000 times, if the guy flipped a coin, something like that, and kept that heads 10 times straight.
Yeah.
Well, he forgot to tell you that he flipped the coin 1,000 times to get that example.
Right, and that's where most people are very, very poor at understanding statistics, and especially in the market themselves. In fact, in doing studies, I talk to a lot of people, and they always go, "I back tested it." And that's exactly what they did. They tested it backwards. And one thing that I always talk about is that when people talk to me about writing software and testing stuff, is that for the most part, what you're trying to do is test forward or test in Windows. If any kind of algorithm goes from the closest state to the oldest state, I know that 99.9% I shouldn't waste my time in talking to them any longer, because what they've done is a thing called curve fitting. They've backed the curve into whatever thing that they're figuring out. And I've probably seen 100 people run ideas by and try to sell products over the last 15 years, and every one of them that I saw lose repeatedly was all back tested, and truly it was do it. Now, you should be able to take out 15 years of data and probably take 3 years of that data from any window and see over time, do those results follow? Or is it only in that over that 15 years do your results stand up? And that's called windowing. There's some other technical things that I could get into, but I digress. Now, any other questions now that I've wandered far away from the original question?
It's good. You're talking statistics and stuff, and that's something I'm shy in, and I'm glad you did.
Have you read Fooled by Randomness?
No, I haven't. I heard you mention that, and I might have to try to get my hands on that.
Go ahead.
When you were talking about buying out of the money, what I've been looking for is trying to time the swings. In the case of IWM, I'm waiting for him. If I do trade him, I did okay with puts on JPM, and I closed them on the 1st of December, and I did okay. And I'm waiting for the next swing down to either puts on IWM, puts on JP Morgan.
I wouldn't puts on JP Morgan. It actually looks pretty good.
It does, okay, it's stronger then.
Yeah.
From what it looked like a month ago.
They've gotten better, but there's a lot of low-hanging fruit out here.
Low-hanging fruit?
Hopefully we've got D from Orlando. Maybe he'll call in before the end of the show. But we're going to have my phone call with him from August 23rd, where we were talking about the 3D printers and how those stocks have rolled over.
Interesting.
I mean, when you looked at those, I actually said and we're going to put the whole 8-minute phone call up on the front page of TFNN, so you'll be able to, I think it'll be up there by 4 o'clock or 4:30 tonight, so you'll be able to listen to the 8-minute phone call. But I already said that if you wanted to look into the first week of September, that you're going to find all these stocks were having huge amount of supply come into the marketplace. So if you look at like X1 down hugely, this thing very cratered yesterday. We were shorted in the daily newsletter at about 71. We had some other stocks. One guy that called was short on SSYS. I knew it was going to go to $100. This thing blew apart this morning, and it blew apart because it also had a secondary offering. X1 had a lockup for its IPOs. Stratasys is coming out with a secondary offering, so everybody's going to be diluted. X1 is coming out with a secondary, and I suspect that we're probably going to see DDD come out with a secondary. All these guys are growing like weeds, but they need money, and instead of borrowing it, they're just printing more stock and handing it out. DDD actually holding up rather well. But when you look at this one, it is probably, you had the May 14th high out here at 51.94, 13 million shares. Could only get into it with September 3rd with 6.4 million shares. So almost all these stocks, fairly weak up here, and maybe you'll start catching some ABC downs. I'm just going to say that there are a lot of stocks out there that are very weak. J.P. Morgan's not one of them.
Oh, gotcha.
And I don't know if you heard my conversations. One of my rules is that I don't trade against people that have their own trading floor trading their own stock. And J.P. Morgan, Goldman Sachs, those guys have always, they've handed my ass to me in a hat.
Too many times.
Too many times for me to go back to it. And all they do is come out with some bogus press release or something else, run the shorts, and that's it. And it's just
and force the shorts out.
Right, and there's easier money to be made. So I will just leave it at that. Anyway, I want to thank you for the phone call.
Thank you. Thank you so much, David, for your help.
And if Dee's out there from Orlando, maybe he's working or something, maybe he can give me a call today, because I'd like to see how he thinks my call of August 23rd was on these 3D printer companies about weakness into September. But anyway, well, we'll be looking at that later. You can also give me a call at 877-927-6648. That's 877-927-6648. Had a question about BRY in the den. BRY. And Berry Petroleum. Interesting. It's certainly back up here. High volume low. Ooh, very interesting. When we're talking about low-hanging fruit, this is not bad. You've got two dojis out here, and that is very, very nice. The last swing high out here was 44.02. That was the June 19th high out here, 1 million shares. We're coming right into that line of supply, 629,000 shares 2 days ago. Yesterday, 357,000 shares, 146,000 shares today. Pretty sweet. Thanks, gold 25 in the den. So we'll have to keep an eye on that. But to see, what is POK? I have no idea. Okay, anyway, we're just looking around. Anyway, Berry Petroleum, another good example of one coming back up. And of course, you've got a high volume low out here at 5.5 million shares at 38.48. So there's one that would look very sweet to me. Let's get back to some of the other stocks out here. Oh, of course, see if we can update this real quick. Do we have winners for yesterday's? Yes, we do. Daily winners for the trading competition up here is G. Kaplan, X. Vang, O. Fluman, C. Barrow, and A. Klein. And remember, you have to place an order to win, and that is going to be, well, you've got, what, an hour and 12 minutes left to be in the last, this is the last draw today. It is. So if you've signed up for the competition, make sure you go in and place an order, no matter what it is, because it probably won't really matter left with the last hour left today. But certainly get in for the drawing today and hear the prize winners tonight. So be interesting. Anyway, we're going to get back to some of these other stocks. Wanted to look at the volume. You know, we're doing, is that right, 2 billion shares for the day. And, of course, light volume, we're up at 4 points. I just don't see more than 10 points up or down until probably Wednesday morning. And we're probably going to get a little push one way or the other. And then we'll find out at 1 o'clock or 1:15 when Bernanke comes off the mountain with his stone tablets, and what we're going to do at least for the next 4 or 5 months until the next Fed president steps in. Anyway, we're going to break. Give me a call, 877-927-6648. Now that phone number is only for the sexy people. Just remember that. We'll be back in a minute.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter,
Patterns, Profits, and Peace of Mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.6% profit to an incredible 48% profit in just one equity. And all 6 of those winning trades had been initiated no earlier than just the previous month. With the 600th weekly Gold Report issue fast approaching, Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began, and right now you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber, as this volatile gold market provides trading opportunities after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial to the Gold Report today by visiting TFNN.com. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Yeah, the theme from Friday the 13th. I actually met the actor several times that played Freddy in all those movies. Wasn't that great an actor, but boy, was he lucky when he got set up and signed the original contract, because when he decided to do it, he was at least a well-known actor at the time, and kind of a low-budget thing at the beginning, but he got the rights to that character. If they made any other movies with it, he had to be in it, and boy, I think, what is it, Friday the 13th, number 13? Probably so many unresolved issues in the previous 13 Friday the 13th movies out there. Hard to keep them all straight. I just remember, like, what was the first one that had the girl that can't poop now and has to sell Dannon yogurt everywhere? She was in Trading Places too, but always pushing that yogurt for the internals of women. Anyway, we've got somebody asked about Monteith, M-O-N-I-F. The dollar stock looked to me like you'd probably want to catch this thing back down around 75 cents if there was all a possibility about that. Of course, online or like on-air purchases, a lot of people in that business, and a lot of dead companies in that business, actually. I know PayPal is now pushing their version, and NFC has been pretty much proved to be fairly full of holes and easy to hack, and people are kind of shying away from the NFC version. Yeah, I mean, the thing you'd want is this thing had some nice sign of strength up here to 89, but back to 75 cents would be where you'd want to look at this thing on a light volume. See if there's anything else out here moving before the end of the day. We've got about 2 minutes. I am going to be talking about the origin of Friday the 13th tonight on the Tom O'Brien Show. Most people believe, and it does, the original origins go back to the Knights Templar being killed by a French king to balance his coffers. But there's about 400 or 500 years where no one mentioned Friday the 13th ever again until something happened in the stock market. And actually, the reason that Friday the 13th is bad luck has to do with the stock market. I don't think most people know that. Anyway, we're going to tell you why and how that occurred tonight on the Tom O'Brien Show in my Tech Insider Hour. Just a little tease out there. But I think you'll know just a little bit more than when you started when we do that. And I'll be in, I think, in the 24 past the hour in the first 4 o'clock hour tonight. So we'll take a look at it then. Anyway, I wanted to just see if we were getting any kind of volume before the end of the day out here. 2.1 billion shares on the consolidated tape. We're up a little bit. Again, I think we're all waiting, building energy for Wednesday's FOMC meeting, and I don't think that there's going to be much between now and then other than to spend a lot of time, a very good time to read, look, ask questions, why not much is going on. This is kind of the good time to do the spring training that baseball players do. Look at the fundamentals. Go back and look at past grades. Try to make yourself a better trader. And that's what I've been doing, working on my computer, getting things ready for next week. Because I think we got the Super Bowl, I think, coming up shortly in the markets. Anyway, we should be going to break here. I don't hear anything. But we will... oh, there we go. But we will be seeing you in just about an hour. We'll see you again, same bat channel, same bat time.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.